Le webinaire va bientôt commencer. Veuillez rester en ligne. Le webinaire va bientôt commencer. Veuillez rester en ligne. Le webinaire va bientôt commencer. Veuillez rester en ligne. Le webinaire va bientôt commencer. Veuillez rester en ligne. Le webinaire va bientôt commencer. Veuillez rester en ligne. Le webinaire va bientôt commencer. Veuillez rester en ligne. Le webinaire va bientôt commencer. Veuillez rester en ligne. Le webinaire va bientôt commencer. Veuillez rester en ligne. Le webinaire va bientôt commencer. Veuillez rester en ligne. Le webinaire va bientôt commencer. Veuillez rester en ligne. Le webinaire va bientôt commencer. Veuillez rester en ligne. Le webinaire va bientôt commencer. Veuillez rester en ligne. La diffusion vient de démarrer. Tous les participants sont en mode écoute seul.
Hello, everybody. Let me know if you can hear my voice and see the welcome screen. Type in that you can hear and see, and we're going to get started on class number 3. So just give me a heads up. A couple of you type in, come on, let's see it, let's see it, let's see it. Okay, thank you very much. Okay, everybody, welcome to day 3 of our 5-day challenge. We're going to cover a lot of good stuff today. So get your thinking caps on and we're going to get going. So first off, I wonder if anybody has any questions before we get started. Any areas of confusion, any questions, anything that you just got to know before we start today? If not, we're going to get right into it and we're going to cover some more major topics, particularly about software, about our app. You can access the trade room with an app. Okay, so I don't see any burning questions to start. So once again, I want to welcome everybody. I want to thank you all for spending your time on the challenge. So ideally, the goal is that when this education is over, you're going to have a great idea about all the features, not all the features, but a significant understanding of what it means to trade by appointment. So I always like to do a quick recap. the quick recap is our system has the 4 major elements: the WMM, the weekly market mover schedule, the DMMs, the daily market mover trade reports, of course, trade room access, and being able to use the software. Those 4 elements put together and you have a trading system. So yesterday, we did a lot with the software. We went over the breakout trade. We did a little bit on the trap trade on the DMM, but today, and we talked about the range trade as well. Today, I'll get a little bit more specific and we'll talk about those extra setups that our software supports. So it's important to understand, all right, what's critical to understand, and this again always is the NinjaTrader platform. That's the software that we use. Our software installs into the platform. To call up the software, you just right-click on a chart, you click on the word strategy, and then you double-click either JOBB version 10 or JOBB trap trade. Before I go right to the trap trade, I just want to make sure that everybody understands how you can find the various setups that our software supports. So if you click on JOBB version 10, click it twice, it'll show up under configured, and then on the right side, all of these elements that I'm scrolling through are elements that can be changed. But the key to remember also is this: most of them don't get changed. Many of them are default, meaning they just stay there. They're just used by the software and you don't have to change any of them. So most of them you're leaving alone. In order to reduce confusion, if you hover your mouse over the various input items, okay, I would call these a field, right? It's a field into which you input data. So if I hover my mouse over trade type, it actually shows you the type of trade that it is. It gives you an explanation of the item that you're entering. Bracket, I hover the mouse over the bracket. Distance in ticks from the central price. So remember, you can hover your mouse over all of these various items, these fields, and it describes them. And some of them, it actually even describes the methodology or the syntax that you would use to enter a trade, okay, and to use that particular item when you're entering data. So it's really not hard to use the software. The point of why we did all this is because when you're trading fast-moving events, you want to automate as much of the process as possible. Sometimes you can't automate everything because sometimes you're going to manage your way out of a trade. Sometimes you might want to put your orders on at the time that you choose, not at the exact time you're typing in. So in other words, there are different setups that we have above and beyond all of the ones we're going to go over in the challenge. Our software is called an ATM. It's an automated trade management program. So when you trade on a platform, most professional platforms like NinjaTrader or multi-charts, all of the MetaTrader, all the popular platforms, TradingView that everyone's used to, allow you to program your own ATM, but it can be complicated to program an ATM. So our software takes that away. You don't have to program an ATM. Our software is an ATM. So what does an ATM do? An ATM moves your stop during a trade. It might trail your stop. It might put targets on the charts. That's what an ATM does. If a target gets hit, it may move your stop to a specific location. Instead of having to figure out how to program that into NinjaTrader, You just have to understand the items that you enter into our software. It's much easier. Once you understand the way that the software is laid out, and once you understand the options you have to enter items in, it's way easier than figuring out how to program an ATM. I don't even have to think about it. Some of it is so logical. You know, what's my first target? How many ticks? If I want a 20 tick target, I just type in the number 20. If I want a 30 tick stop, I just type in the number 30. What could be easier than that? So once you understand that our software is a substitution for learning a whole ATM program, it becomes much easier to understand. It takes care of a lot of the process of manually trading. There are times when a trade will be 100% automatic. A trade is 100% automatic if the orders are put on the chart automatically using, for instance, time. And if you hit all your targets instantly, right, that's going to be an automatic trade completely. You're not going to have anything to do. The trade's just going to be over. That's considered a fully automated trade. Many of our trades are semi-automated, meaning we put our brackets on the chart automatically, and then the news will come out, you'll get entered into the market, and you'll have to manage the trade. You might watch your stop being moved because you've programmed it to move. You might watch one of your targets get hit, and you might have to shrink your stop because it's appropriate. That's semi-automated. Then there are other trades that are more considered a discretionary trade, or a trade that still could be semi-automated, but maybe your entry is discretionary. So what do we mean by that? If you choose, for instance, one of our setups, understanding how to choose all the setups is easy. You right-click the chart, click on strategies, double-click the JOBB version 10, and now at the very top where it says trade type, you have a little arrow. When you click that arrow, it shows you the various setups that our software supports. One of those types of setup is called a reversal trade. When you use that setup, by its definition, all you need to put into that setup are how many contracts you want to trade, which is the position size, all right? So let's say we're going to have 2 positions, 1 contract at each position, and we're going to have 1 target for each position. So we'll have a target of 10 and a target of 20, and say we'll have a target of 30. All right? Now, so this is not a fully automated trade in any circumstances, because when you enable and okay the reversal trade and then check it, right? So it's enabled, you get 2 buttons at the top of this chart. One of the buttons is instant long, one of the buttons is instant short. So you're not going in the market automatically based on anything except your own discretionary judgment. Maybe you want to go short when price gets to the PP and fails. You could wait, you could watch the market, drink a coffee, and then boom, the market gets to the PP. You click the instant short button. Now you're in the market, but you have a trade that is being protected by a stop that you programmed in, right? We set a 20 tick stop, and you have targets. So you're not trading naked. In other words, normally it can be very risky unless you're a very expert trader to trade without a stop. Normally, most people will not trade without a stop. And that's because the stop will protect you from something unexpected happening. The definition of the stop is that it's where you get taken out of the trade if the trade goes against you. And it's not always going to be against you. Maybe you're in a profitable trade and it's time to get out because the market has reversed. So a stop is not always a negative, but it's an area where you're getting out of the trade. All of these items, they can also be moved around on the chart. because NinjaTrader supports something called chart trading. All right, and that's a really nice feature that most of the good platforms support. But so you could see that you could put a trade, you can design your own trade because of that. All you have are buttons and positions, and you can do all of the research, the study that you like. If you like looking at Fibonacci's, if you like looking at the VWAP, whatever you like looking at, you can use our software for news trading, for event trading, to make an appointment, or you could just use it in your regular daily use also. Okay, so you can use the software for the way that we trade or for the way that you trade. The market's in hybrid. So Ranjit's asking a question, are we, I'm not sure I really understand your question. Are we using the whole program, starting the program at the time of the year when markets are going to be in hibernation? So the markets are in hibernation for maybe a week during the holidays. Maybe I would say next week there's hibernation, but you know, the markets are always open. There's always news. The markets are always moving. So I guess I don't really agree with that whole concept that there really is no hibernation. There are, of course, busier times for the market, but when the markets are quieter during the holidays, the thing to do is just concentrate on the news or the events that have the greatest possibility of moving the markets the most. But there have been some extremely good moving markets already. And in fact, you know, just a reminder, everybody, if you can, use the Facebook community because you're going to learn things from other traders. Langford has posted something really cool last night. He made money trading the British CPI report. All right. And look at the move on British CPI. It had a very significant move, a very tradable move. And there are some traders that would say that this time of the month and year is markets in hibernation. But there are enough reports out there, even when the markets are quiet, that if you're interested in trading during the holidays, there will be plenty of opportunities to trade. You just have to use common sense. You know, most of trading is not being expert. Most of trading is common sense. You know, don't trade when the market is totally dead. Don't trade when there's zero volume. You know, don't trade when the Fed is talking. You know, don't do the things that you should know are going to create lots of problems. So you want to try to use as much common sense as possible, you know, lined up with all the knowledge that you learn. And that will help to keep you safe, whether you're trading news or whether you're just trading events or discretionary. A lot of what we teach is, you know, available and should be used no matter what kind of system you're trading. A couple of things. So don't forget that we will have an action item for today. Let me give everyone the action item. And the action item is going to be to enter the DMM. DMM, use the software, take a DMM, and what I'll do is I'll give everybody a DMM. I'll give everyone the DMM from today, and you can post the DMM to Facebook. I'll post it on Facebook also, and you can just show the software on screen that you've entered a DMM into the software, because if you know how to do that, then you are more than 50% on the way to being able to use the software with a trade. I'm going to put the DMM into the webinar right now. It's going to be a handout. So you'll be able to you should see it while you're on the webinar right now. If not, it'll be posted onto Facebook later after class, and you can use any one of the DMMs because the DMM has multiple DMMs. I'll show you what I mean. So let me just post this in the handouts. So when we look at today's DMM, right, today's daily market mover had the British news in it. It had the bond report. It had this morning's CB consumer confidence. Many DMMs have multiple reports because there will be days where we have multiple trades. So what do we mean by the action step? All right, and while we're doing this, let's kill two birds with one stone. So we go to Facebook, right? You go to Facebook, and here I'm going to create a post, and I'm just going to do, here is the DMM for today's action step. All right, and then all I have to do, if I do it correctly, choose photo or video, and all I have to do, you don't even have to put the DMM on the screen, just show a picture of your software, put a note in, we're trying to make it easy for you. Just put a note in that you've put the DMM, hang on one second, it's not taking it, so I'll do it a different way. You don't have to put the DMM on your photo, just put a note in. In other words, do it this way. All you have to do is say, here is the software, or something of this sort. Here is the software I used. Anything you want to say, okay, for today's action setup. That's all you got to do. Just let us know that you did it. Here's the software I used for today's action step. Okay, just let us know you're doing it, so we know you're involved. Langford's been really great. He posted a whole bunch of winning trades already, and some winning trades that we haven't normally traded. Once you understand what you're doing, you can design your own trades. You can find your own trades. You can design so many different setups. And today, one of the lessons I'm going to give is how to test an event so that you can decide if an event is worth trading. All right, that's going to be one of the things we cover. So let's get back into the software. You're going to go to strategies. You're going to go to JOBB version 10. On the revert, you now know how to put in the reversal trade. All you need are positions, targets, and a stop. And you have the ability, by enabling the trade, by clicking the check mark, you now can enter the market at any time in a safe manner with a stop and with targets. Don't forget also that at the top of the chart, when you enable most trades, you'll get a break even and a combined button. There's two buttons, the break even button and the combine button. The break even button, let's say you're in the market. The break even button, if you're profitable, it will only work if you're profitable, because it will move the stop to break even plus a tick. All right, it'll move the stop to break even plus a tick. You can't move the stop into a profitable position if your trade is negative. The combine button does something cool. Let's say, just like now, the trade's moving really slowly, and you don't feel like moving your orders smaller to try and get out of the trade, or maybe the trade's expanding, right? And you moved your targets further away, and you want to combine them. What the combine button does is it takes your open targets and it combines them together into the order that's closest to the current price. So if I click the combine button, what should happen is this should move there. Okay. Here we go. Combine. Bingo. They move together. Now you can move the orders together. If I want to get out of the trade, I can do that. Now look, I'm profitable. I could hit the break even button and it moved my stop to break even. Okay. Actually, it's these days it's moving it to break even. Let me show you why I said break even plus one. There's a command in the software. If you click on strategies, now before, let me backtrack because I did something too fast. When a trade is enabled, when it's checked, okay, you can't see the items you need to change because you can't change them during a trade. So when you want to make a change, you uncheck the enabled button. Then you can see all the items. That's why I zipped over here and unchecked the enabled button. Now, be careful. Don't automatically recheck the enable button while you're in the middle of a trade, or it's going to start your trade over again. Okay, and it's going to like double your orders. Let me put the trade back on because I wanted to show you some. Well, let me show you what I was going to show you about the break even button. The break even button normally goes to break even when you're in a profitable trade. But there's an interesting item in the software that lets you program the break even button. And if you scroll down to where it says, if the market moves X ticks, right above that, it says move stop BE X ticks. So if that's 5 instead of 0, it can move your break even button to break even plus 5. If it's BE minus 2, it'll move your stop to break even minus 2. So if you want to put your picture on Facebook, basically, if you don't do it through your phone and you're doing it through your desktop, you just should take a picture of your face and you post the file. So when you do a post on Facebook, it'll ask you, what do you want to post? You know, do you want to post a file? Do you want to post a picture? So the thing to remember is just choose. Pretty much if you're going to post to almost any system, you know, even YouTube, they'll have a way what they'll ask you. So if I want to do a post, let me backtrack because look, photo, video, if I click on that, if it's a proper format of a photo or a video, it'll let me just drag that picture. So I could post, theoretically, I should be able to post a picture of myself or a photo, okay? That's a picture that I had on my desktop. All I did was drag it over. That's how you would put a picture of yourself, okay? For today's action step, just type in, I looked at the DMM, whatever you want to say. I looked at the DMM and I understand how to enter the data into it. And here's how you enter the data into it. So that's our action step. Yesterday, we covered the DMM. We covered reading the DMM, understanding the DMM. So what we do every day in the trade room, we go through the same things over and over every single day. We do the same things because repeating them helps us to get good at them. So a DMM will often have multiple reports. At 2 in the morning, there was a British report, and this was the setup that we were recommending, okay? And people that traded that this morning, quite a few of them were able to make money on that report. It had a pretty good move. If you scroll down the DMM, it has our second report of the day, and we had a small profit on CB consumer confidence this morning, okay? But it has the setup. The setup, remember that you're going to type into the software, would be the setup in the yellow line. So let's say that that's our action step for today, and it is a very important action step, okay? Right click it, click on strategies. I'm going to remove the strategy that's already there. There won't be something there for you. Double click JOBB version 10. It's a breakout trade. That's the type of trade this is. It has a bracket, okay? It's a breakout trade. The first thing you're going to enter in is the activation time. Eastern time is what we generally use. How do you know what the activation time is? The time of the event is the second line of the DMM. Consumer confidence took place at 10 o'clock today. That's when the news is released. We activate our orders 9:59:59 Eastern time, okay? If you're in California, you're probably going to type in 6:59:59. You're going to use your local time. Okay, don't get all bent out of shape that you don't know what time you should enter, blah, 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 et cetera, et cetera. Enter your local time because that's the time the trade's going to be triggered, okay? But enter it in so that if our trade is 10 o'clock and we're entering the time 1 second before, you do it exactly then. If you're in another country and your time is 11 right now and it's 1 minute before the time of the event, you're going to type in 10:59:59. Okay, so we typed in 9:59:59. We had a bracket of 12. We had 2 targets, so that means we have position 1 is going to be 1 target, position 2 is going to be our second target. And then what were our targets? Target 1 is 10 ticks. Profit target 1, 10 ticks. Profit target 2, 25 ticks. I'm going to type in 25. Our stop was 15 ticks. All right, the stop loss, 15. Now, that's the DMM. The DMM is entered in, but there's a few other things to remember. So you don't have to do anything else yet. Scroll down a little bit. All right, scroll down. You don't have to worry about range trade. That's a different setup. We'll get to that in a minute. You don't have to worry about unattended. We're not really teaching unattended trading. That's for very advanced traders. Optional, most of these you don't have to change. The first thing we have to deal with, turn off your account warnings. All the account warnings do, they just tell you if you are trading live. They will give you a warning. Hey, you're trading live. You sure you want to be live? Okay, that's what account warnings does. And then just scroll down a little bit further. You could check your input series. Okay, you could check the input series. The input series should always be the chart that you're trading. On the DMM, on the upper right, it shows the market we're trading for that report. That's what your chart should be set on. My chart is on GC 0224. Okay. If that said ES 0324, then I would change my chart to ES 0324. So I trade the right instrument. Check your account. If you're trading in simulation, you should be on sim. If you're trading in live, you would change it to your live account. And then one other important thing that I like to do, even though these extra things are not part of the DMM, it's good to know and get in the habit of doing all these things. I use the label command to let me know what I'm trading and or to name the trade. In this instance, I'm just going to put GC so I know I'm trading gold. Or you could do GC and CB for the name of the trade, CB Consumer Confidence. But for just the purposes of entering in the DMM, you need the bracket. You need, first off, the chart. You need the bracket, the activation time, your positions, one for each target, and your stop. Then all you have to do, all that's required to enter in a DMM, just make sure your account is on a proper account where it should be, live or sim, apply it and okay it. When you do that, it will put the trade into the NinjaTrader control panel. Make sure your tabs here are on the word strategy or you won't see the orders. You won't see the setup. You won't see the trade. Okay. And then when you're ready to go, you press the enabled button, you click it. Now, because the software is set for 9 this morning, you know, almost 10 o'clock, the software is going to think the trade already, the time is already passed. So it's going to activate the trade and it's going to put the brackets on the chart. There's our brackets, right? But that gives you an idea how you could design your own trade. You could set up a bracket trade any time of day based on a bracket. How many ticks above the current price? This orange arrow is the current price. How many ticks below the current price? And you have a trade. You have a stop. We put our stop in, but that's how you enter. That's what we mean by entering in a DMM. Okay. The DMMs, when you're a subscriber, are sent to subscribers via email. They can be gotten from our website. And like I said, I put it into the handouts here inside this webinar. There should be a place in the webinar where you can see it as a handout. Okay, so that's what we mean by doing the action step. Now, we covered yesterday breakout trades. That was a breakout trade. Another very popular type of event that we trade is the trap trade. Now, let me show you, just as we're going, certain things will come up that are very useful. So let's say you're simulating trades and you notice that you see money in the control panel and you just want to set your control panel back to 0 when you're simulating trades. You can click the account tab, click the sim tab, right click it, click edit account, click reset. Say yes with history, clear history checked, and it will reset my sim account to 0. I can go back to strategy tab, and now it's like I'm starting over. So each trade that I practice can just show $0. In order to see the dollars on the chart trader, this gray section is called the chart trader. Remember, we went over it yesterday. It's turned on with this icon up here, the chart trader icon. Okay, you can turn it off and on. All right, the chart trader. For now, you can also modify some of its properties so that you see the currency when you're flat. When you're not trading, you want to have show P&L when flat checked, and you want P&L profit and loss display to be currency. Then when you okay it, when you're 0, it'll show you $0. Okay, so today I also want to talk about trap trades. Trap trades are very important, especially because lots of trades will change direction. We just know for a fact that they are going to change direction. We've studied, remember, what are we doing? We're studying the behavior, all right? That's what we're doing. We're studying the behavior of these events. We notice that certain events reverse like crazy. So we came up with a setup called the trap trade. Let me show you what the trap trade does. Let me show you a trap trade. Here's the concept. So in a breakout trade, right? I just showed you a breakout trade that we set up. We had, for instance, this morning, we had consumer confidence. So a breakout trade, and I know that I'm repeating myself over and over, but it's important. So look, I happen to have the oil trade real handy from this morning. CL inventories. We're putting a bracket. The news comes out. The price explodes. We get pulled into the market. That's what a breakout trade is. Those X's are the orders. The news comes out. Boom. We're pulled into the market short. And now we're going to manage our trade. With a trap trade, instead of trading in the direction that the market goes, we're going to do the opposite. So the concept with the trap trade is if the price bursts down, we're buying the market. We're going to go long, and we're going to make our money when the market changes direction. So a trap trade is a specialized reversal trade. And by definition, because it's the way my boss did it, instead of calling the orders brackets, they called them tiers. So the trap trade generally has a collection of tiers. It has 2 tiers. Let me show you a trap trade so you have a real idea of what I mean. Give me 1 second. Where did the trap trade go that I just pulled for this morning? Give me 1 minute. Here it is. Okay. So this setup is the trap trade setup. It has a DMM, and some DMMs are more extensive than others. Some just have the setup. So this has a setup that says trap trade, prep seconds, cancel if we use it. We don't usually use the cancel. Starting from the top, though, it still has the name of the trade, the market that we're trading, and the setup. But the setup's a little bit different, okay? The setup's a little bit different. If you notice, it doesn't have targets. It just has time of an event. 10 o'clock was University of Michigan. It's a particular trade that we do as a trap trade. It has the time of an event, preparation seconds, tiers, a range, two of them, and a stop. So let me explain. I'll show you the trade first. So in the trade room, remember, we're streaming always. I'm always streaming to all of you my software and how to set it up. So you don't have to worry about being confused. Well, if you can open the software, you can figure out as we go through it how to enter the trap trade. So the items are different. When you call up the trap trade, you right-click the chart. Instead of choosing JOBV version 10, you choose trap trade, and it brings up less items because there's less items to choose in a trap trade. You have your positions. So if you're going to trade one contract for each position, you put a 1 in. We have our stop, so we put the stop in. And then you have tier 1, tier 2, time of event, and the activation time. The activation time is how many seconds before the news is released do we put our orders on the chart. So if it says activation prep is a 5, you put a 5 in there, and what's going to happen? 5 seconds before the time of the event, which must be typed in, 5 seconds before the time of the event, our orders are going to show up on the charts, okay? And then you have your tiers. If we have a set of tiers, usually we have a range of tiers. The tradition in the trap trade was that we have not an exact number, but we use a range. So in other words, tier 1 is between 28 and 30. So your tier could be 28, 29, or 30. And your second tier could be 48, 49, or 50. And the reason we do that is if you understand the trap trade. So follow me here for a second. On a breakout trade, we want the market to explode in one direction, preferably just keep moving in that direction. And that's how you make money in a breakout trade. You get pulled into the market, it keeps going in the direction you're pulled in, you make your money. On the trap trade, it's different. And there's something we call a zone of safety. We want the trade to reverse. So if the market we're trading moves 28 ticks and then it keeps going, it will stop us out because it will hit our 25 tick stop. But we have a zone of safety in a trap trade. Remember, a trap trade is a trade we expect will reverse. So if the market moves up 40 ticks and then changes direction, we have 2 tiers. If it moves past 28 or 30 ticks, we get filled on our first order. If it keeps going and it goes to 49 or 55 ticks, we get filled on our second order. And then we're in the trade with 2 orders. A trap trade, you might be in a trade only with 1 order, or you might be in a trade with 2. Depends on how far the price moves. And you'll see when I show you a trap trade, this is not complicated. The zone of safety, what that means is, what's the worst enemy to a breakout trade? The worst enemy to a breakout trade is if the price pops a little bit in one direction, enough to pull you in the trade, and then it changes direction and takes you out of the trade with a loss. On a trap trade, your worst enemy is what a breakout trade wants. You want, if it moves huge in one direction and bursts through your stop, then the trade's going to stop you out. It's not going to work. What you want with a trap trade is for the market to move enough to fill your orders and then to change direction. So let me show you what a trap trade looks like. This was a trap trade that we took end of October, and we do a lot of trap trades these days. Tomorrow morning we have a trap trade at 8:30. So 10 o'clock, Revise University of Michigan. So watch what's going to happen. Remember, we have preparation 5 seconds. So approximately 5 seconds before the trap trade, before the event takes place, the trap trade is going to put our orders on the chart automatically. All right, there's our orders. So you have 2 orders above the current price. That arrow is the current price. 2 orders below the current price. If the market bursts up through both the orders, it'll put us in the market short, because remember, we're expecting changes in direction from the initial move. So here we go. The news comes out, the price pops down, it fills my first order, and it's already started to reverse and put me in profit. But you have to wait, because look, it wasn't done. It chops around for a while. Let's watch it for a minute or so. We're in profit, but it's not a big profit yet. I'm not really doing anything to check. I'm just waiting to see how this trade is going to pan out. We don't really know yet. We're in the market. It's, it's almost where we entered. We're just waiting to see what happens. I'm bringing my target down because they're quite large. We don't need them that far away. Now, it's really just chopping around. It's not a perfect trap trade. I'm waiting. What you want to happen in a perfect trap trade is it'll start to give you a good profit, so you can, if you need to, cancel that extra order that did not get filled. If both the orders got filled, then I wouldn't have to do anything except wait for it to go up and hit my targets. Now, this particular trap trade, it's been struggling to find a direction. It eventually, we're only in the trade a minute and a half. It went down and hit the second target. So now if it changes direction, it'll put us in profit, and that's exactly what it's going to do. We're in the trade a minute and 40 seconds. It's now starting to move up, and we're now getting into profit. Both our orders are combined. Bingo, I exit the trade with a profit because it filled us long when it went down, and then when it changed direction, it went up, and we took our profit as it went up. Sometimes a trap trade is much faster than that. Sometimes it'll just burst, fill you, explode, and change direction right away. Sometimes it'll be managed and it'll do exactly what it did in that particular trade. Let me see if I think I have another interesting trap trade. We were looking at a new setup last week, existing homes, which actually was part of today's CB Consumer Confidence. It's a very small moving report when it trades by itself. And we had never looked at it as a trap trade before. So this was very experimental last month. And you can see existing homes comes out, the news comes out, our order is right above the current price. Our orders are right there, they get filled. Our first order gets hit. Okay, and you see the X disappear. Now let's see, does the second order get filled? And I was educating, so let me go a little bit further up so we can see this better. Price goes up, hits our first order, second order, and it puts us in the market short, okay? That's the key with the trap trade. We had 2 orders on the chart. The news comes out and the price starts going up. And now what's going to happen? It goes through our first order and it puts us in the market short. I'm slowly bringing up my targets because they used to be our opposite orders. They are now our targets, and I'm just making them reachable. Now we're waiting. Is the second tier going to be taken out, putting us in the market with an extra order to tick to 2 contracts, or is it going to reverse? It fills our second order, our stop's way up here. We're not in any danger at this point of having a losing trade. We're not profitable yet because We're now waiting for the trade to reverse. Our studying said that existing homes, when it trades by itself these days, has a great opportunity to change direction. That's what it starts to do. We have two targets. This wound up being a very, very large moving trap trade. It goes down, it fills the first target. I move the second target further away, and watch, it's going to keep going, keeps going down. I'm trailing the stop to protect profit. It was a very good moving trap trade, but that's the idea. We got filled when the market went up, and we want to make our money when the market goes down. That's what a trap trade does. So it's a specialized reversal trade. That's how I would define a trap trade. The items that you have to look at for setting up a trap trade: you put the software on the chart, right click like we always do, double click trap trade, and then the key elements are the stop, which is always on the DMM, the time of the event, always on a DMM, right? Always. The activation prep time, how many seconds before the event are the orders going to show up on the chart? And then the tiers, okay? How big are your tiers? Is it 20 ticks? Is it 30 ticks? That's all you need to set up a trap trade. There's very little. The positions are, how many contracts are you going to trade? So you have a stop, you have your tiers, the time of the event, activation, turn off your account warnings, apply it and okay it, and you have a trap trade set up and ready to go. Okay? Not really that complicated. Once you understand what pieces make up each trade, you get less afraid of all of the items, because most of them you don't even have to adjust. You don't have to do anything with them. Okay? So that's the trap trade, and we have a lot of them. We study these reports constantly. We're always looking at, why is a report a trap trade? So we did extensive looking at many months of existing home sales. We went from October back a year. We looked at the maximum target, the maximum explosion that we would expect, so we can look at the movement that we studied on existing home sales. The biggest move right on this category here was 24 ticks. All right. So we don't need a 50 tick tier. You're never going to get filled. So when we had the trap trade for existing homes, it was like 10 and 18 were our tiers. Okay. These right there. And we had a stop of 12. Remember, I talked about the zone of safety. You add the second tier to the stop, that gives you your zone of safety. How many ticks would it take to stop out a trap trade if it moved in one direction only? 18 plus 12, 30 ticks. Existing homes has not moved 30 ticks when the news came out in more than a year. So we have what we feel are very reliable and potentially safe trades. Okay. So Joseph is asking a question: don't you have to set up the trade a second or so before it gets activated? I mean, the second or so before, Joseph, is just putting it on the chart. We know the day before what the setup's going to be. So the time of it being 5 seconds or 10 seconds before the event doesn't have to do with anything other than we know when we're putting the orders on the chart, but there's no rushing or anything you have to worry about doing. We know how much in advance we want our orders to be on the chart for every event, almost every event that we trade. The only events that we don't know when the orders are going on the charts are events that don't have a specific entry time. Those orders, you don't know specifically when you might put your orders on the chart. And that's when we come to another type of setup. I'll do a very quick range trade setup because we do have a fair amount of range trades. It's another popular type of setup that we use. The range trade is part of JOBB version 10, and you click range, okay? And a range trade is also very easy to set up. It's all about just knowing how to read the DMM, all right? If you can read the DMM, then you can set up your trades. So let me show you a very recent DMM. Yesterday's API report is a range trade, okay? That's one of the main ways that we trade it. So the API is a oil trade that we trade every week. And the DMM has range on it, okay? It says range trade. Remember, the yellow line is the setup. And what a range trade is, it's a trade that instead of using a bracket, a fixed number, like saying a bracket is 8 or a bracket is 10, no, we're going to create a bracket with time. And with a range trade, we have a bunch of different setups. We can use time, we can use zones, we can use bars, because that's what traders like to use. One of our most famous popular type of range trades is based on time. So for instance, the API report, if you choose range, by definition, because we're telling you, start the range at 16:29:58, the range start time. You just type it in, 16:29:58. Then we have something called the activation time, the entry time, 16:30:02. All right, so it's actually a very short range. It's only like a 4-second range on this trade. And then we have something called ticks above the range, ticks below the range. Right under range trade, range start time, ticks above range, ticks below range. Our definition for this trade is 4 ticks above, 4 ticks below. Show the range graphics on chart just means that you see the range while it's drawing, and the range box color, it just draws the range in purple. All right. The same things you still need. We need our positions. If you're going to trade a 2-contract trade, position 1 is a 1, position 2 is a 1. And then we have 2 targets. Target 1 is a 7. Target 2 is 19. And we have a stop of 13. So what did we do? We create a range with time. We start the range at 16:29:58. We end it at 16:30:02. It puts our orders on the chart, 4 ticks above the range that was created by time, 4 ticks below that range. The news comes out, and if the market moves through our orders, we get pulled into the market. So let me show you a range trade, a real range trade that took place. All right, I'll show you yesterday's API report. It happened to trigger very quickly. So yesterday's API, as long as I can find it, for some reason, I do not see it in my download file, my download folder. I think I accidentally erased it this morning. I knew I did something stupid. Let me just see if, nope, I don't see it. So rather than spend time looking for it, let me just show you a different API, show you the same report. Give me 1 second. The API report happens to use a very short range. Some of our earnings trades in the morning, they use maybe a range that'll draw for a minute or 2 minutes. Here's last week's API. Pretty sure it triggered pretty fast also. So here's what we're doing. Remember, we're creating the range. What happens is the software starts drawing the range on the chart. 4 ticks above the range, our orders show up. 4 ticks below the range, our orders show up. And when the news comes out, we get pulled into the market. So let me show you that exact trade. That's exactly what happened. The news came out very close to 4:30. There's our orders, and it shoots through the range, pulls us in, and would have been a winning trade last week. Let me show you one more range trade where it's a little bit easier to see all the lines. There's something important I want to show you about a range trade. We do a lot of earnings trades as range trades, particularly in the morning. And one of our favorites is Home Depot. Home Depot's been a fantastic profit center for us. Home Depot, we traded back in August, and you'll see what's going to happen. I just want to show you where it's real clear so you can see it. So earnings are every quarter. So if you notice here, you have inner lines and you have outer lines. The outer lines are where the orders will be placed. So what's really nice about the range trade is that while the range is drawing, it shows you where your orders are going to be placed based on the number of ticks above or below the range you're decided upon that your orders are going to be. The inner lines are the actual range that's being created. As the range gets bigger and smaller, your orders, where they're going to be, they actually change location. That's a range trade that has not yet finished drawing the range. It's a 6 a.m. trade. It's a range trade of Home Depot's earnings. Watch what happens. Home Depot comes out right on time. The earnings push the market through our range. I believe they're going to go up. Yep, it goes up, pulls back a little bit, and then it should explode up. Home Depot's been great to trade. Price goes up. I'm trailing the stop, following the price. Very nice profit as price goes up on Home Depot. But we traded a range trade. So a range trade, not complicated. You have a start time, an end time to the range, you have your targets, and you have your stop and your activation time. Ticks above the range and below the range. They will put the orders where they're going to be after the range has calculated. When the range is done calculating, after you get to your activation time, then it puts the orders X ticks above, X ticks below. That's how you get entered into a trade, okay? So that's a range trade. Let me take a break for a minute. We've already covered a lot of stuff. Let me go through and see if there's any other questions. Joseph, I don't think I answered your question properly. You don't have to activate the trade 1 second before it takes place. You could activate the trade an hour before it's going to take place, because remember, many of the trades are based on time. They're not going to get activated until the time is reached where the orders are supposed to go on the chart. So you can enable the trade anytime you want, right? I think that's what you were asking. You don't have to wait till the last second to activate your trade. Just like with a range trade, what if you wanted to trade a range? What if you like to trade gold, right? What if you like to trade gold? Let's see if we could do something clever. We have a range trade chosen, right? You just woke up this morning and you want to trade gold, all right? Go to strategies, double click so it shows up under configured, and choose range trade. And what time is it? So we have our clock that everybody got, the clock. It's 3 o'clock already, okay? And maybe we want to trade a range trade from 2:30, all right? So our range start time is going to be 230, 1430. All right. And our end time is going to be 303. All right. Let's make it 303. So it's going to be 1503. All right. 1503, we're going to trigger this range trade. We ignore the bracket. You don't choose a bracket, but we do want a position. We have one or two positions. Position 1 is a 1. Position 2 is a 1. We have a 7-tick target, a 19-tick target, let's say a 20-tick stop, and 5 ticks above the range, 5 ticks below the range. Watch what happens. I am going to activate this trade. If I did everything properly, it's going to start drawing the range. Yep. It started at 230, right? Remember, we said start the range at 230. It's drawing the range. The upper line is where our 5 ticks above are going to show up. The bottom line, 5 ticks below. Everything inside this area is the range. 3 o'clock, there's our orders. Now, the range stops calculating because we had a set time. So it's easy. If you like trading between 9:30 and 10 in the morning, you want to trade a breakout of the market range at the open, a half hour after the open, boom. You could use our software to create a range trade. But that clearly demonstrates how a range trade works. To cancel a trade, you can just click the X's as long as you haven't been filled, or you can disable the enabled button. All right. Everything that we do, Ben asks, how do you decide when to use the range trade or the trap trade? Everything is just dependent upon how does the event move. If we see that it looks like a range trade is appropriate, we choose a range trade. If it looks like an event reverses all the time, then we lean towards a reversal type setup. If it's an exploding type of trade, then we use a breakout. One thing to understand about a range that can be really good, if it's an event that has so much volatility that it's often too risky to trade at the exact moment of the news, a range trade can be really cool because you could miss the whipsaws, right? But if it's like an FOMC where it might range, and John, this might fit more of what you were asking. A range trade might be an appropriate trade to trade an open, but not actually trade the moment of the open, but trade the trend of the open. So a range trade could be very appropriate because if you make your ticks above and below larger, let me show you. Remember, we just created a range trade. It's still there. Okay, I did not erase it. It was still in the control panel, so I can go back and modify it. If the market goes 20 ticks above or below the range, watch how it's different. Then 5, it becomes much more of a trade that's going to need a trend. If the market starts to trend lower after the range, and that range might be the open, you'll get filled if it goes 20 ticks beyond the open. So that's a way, John, just that I was thinking now, to really get you close to what you were asking me in your email. But you can trade trends with the range. You can avoid whipsaws with the range. So it has a lot of really clever use profiles that fit it. Okay. Let me just take a quick 1 minute. We've already covered a lot, and I have one more really important subject that I want to cover for today. Playback, which I think is one of the most important things. Don't forget the action step. Even if you just go to Facebook, we just want everyone to be involved and just type in, hey, I understand how to enter a DMM into the software. Just let us know you're out there and you're active, okay? The other thing I wanted to show everybody is playback and replay, but let me just go over one other quick thing before that. We have a app that you can use on your phone. So I'm going to give everybody a handout. You could, if you're not at your computer, you can stream our trade room, and I'm going to include this document in the handouts in the webinar. And the way it works, it's not very complicated. The one thing to remember, so you can download our app, but it's not our name. It's another company that wrote it for us, for the people that do this trade room software that we use. The name of the app is by a company called Bellsoft. And when you download it, and they make iOS and or Android, don't download version 3. I'm pretty sure it's version 2. Do not download version 3. Our trade room is version 2. The thing to remember about our trade room, and this really is if you wind up joining our trade room in the future, because right now the trade room is not part of the challenge, but it's just important to know all of the things that make up everything that we do. We do have an app. It works with all phones. Our room is always number 1459, but for people that, even members that may not know we have the app, you can stream our trade rooms. You have to get an ID, and you have to go in the trade room first to get that ID. But I just wanted to let everyone know we do have an app, and there's no charge for it. So you could stream the trade room. Don't forget all the other free tools, okay? There's lots of free tools. You got the clock, a sync program, all right? So you can make sure your computer is in sync. Those things are important. Now, one final big subject. One of the most important things that we use is playback. We always call it replay, but Ninja calls it playback. Playback is the ability to look at an event and replay it. And what could be more important than replaying an event? Because how are you going to study events if you can't replay them? So for instance, if we have a GDP trade tomorrow, and this is where the calendars get really important. And this is why, you want to be in the habit, get in the habit of looking at the calendars, checking them out, and getting comfortable with using them. When you go to Forex Factory, for instance, you click the word calendar, and if you look in an event, let's say for argument's sake, you see a orange folder, and you look at our weekly schedule, and it's not on the schedule. So you're thinking to yourself, wow, those guys aren't that smart. I'm going to test that. I'm going to send a video to 10-minute trades and show them that they should be trading the German IFO report. How are you going to know if you can trade the IFO report? Well, you're going to test it. How do you test a report? So click on the file folder, get the date for the previous IFO report. So it was November 24th. Just notate what time the event was. It was at 4 a.m. Okay. November 24th at 4 a.m. That's the info we need right now. Now, keep in mind, it's a German European business report. It'd probably be smarter if you were a DAX trader to trade a German report. So just for fun, on this example, let's choose a report that we can really test that would make sense, okay? So we're going to test GDP. Let's say that we have a GDP report tomorrow, and you think that we should be trading bonds on it, but we're not. You got our DMM, and you think we're the stupidest people that ever lived, and you're going to prove to us that we should be trading another instrument. So you got our DMM, right? And our DMM, You know what? I don't have the DMM yet because it's for tomorrow. So you have to trust me. The DMM is going to have gold on it, and it's going to have a trap trade. So we don't have bonds on our DMM for tomorrow. So we're going to get the date of the report, GDP, by clicking on the file folder. The previous DMM for the previous GDP report was September 28th. All right. You know what? That's not correct, but we're going to do it anyway. Keep in mind, just so you know, if it says QQ, that means it's a quarterly report. But there's actually a GDP report every month. But they're different sets of data. But suffice it, we'll do this exactly the way it's set up. It's a quarterly report. The last data was September 28th. So remember that, 8:30 a.m. So in order to replay that event, let's say we think that we should be trading bonds on that report. So let's say it's September 28th. By definition, if we're trading bonds in late September, we're going to be using ZN or ZB, and the contract we're going to be using is December. All right, just from knowledge, I know that. We're going to be trading the December contract. It's going to look very weird when we first put the December bonds on our chart, because remember, we're playing it back. We're not in December yet. We're going to disconnect our live connection. We're learning how to do a playback. Disconnect live. Okay? Connect, go back to connections and connect playback. Press continue. Lower right. Now I made a big mistake and I apologize. Let me disconnect our connection. And it's a good mistake. You cannot download playback data if you're connected to the playback server. I'll say it again. You cannot download playback data if you're connected to the playback server. I don't know why, but you can. So just make sure you're either connected to nothing, or you could still be connected to your live connection. But now I'm connected to nothing because I disconnected playback, and I can go get the data that I need. I go to tools, I go to historical data. It opens up a chart for me. Okay. Over here at the bottom, I'm going to click Get Market Replay, and it opens this dialog with these two areas. We said the date of the event was September 28th. So just put it on September 28th. Okay. And we said we're going to trade bonds ZN 1223. I happen to have it in my list because when you type an instrument into a chart, it will appear as the first item in any list when you're looking for a futures contract. So click the 12. So we're downloading futures data from 9/28 is the day, and the contract is 12/23. Just click the download button. You'll see it says loading data. It's done. I can close this dialog, go back to connection, and connect my playback. Continue. And now you've got this dialog here, this little control panel. It's like a tape recorder. You'll notice there's two boxes, start and end. We're going to make them both September 28th. Okay. 9/28 in the box. Both boxes. Now, sometimes things will gray out for a second while the program calculates. It's fine. It's never more than 2 seconds. Both boxes get 9/28. In the blank space under the boxes, I'm going to right-click my mouse on Go To. And the date's already 9/28. I'm going to type in the time of the trade, but I'm going to give myself about 10 seconds before the time of the trade, right? You want to give the software some time to calculate what the setup is. So it's an 8:30 event. So I'm going to type in, let's say 8:29 8:29:50. So when we run the software, it's going to start 10 seconds before the event, before the news is released, theoretically, because it's a replay. We're going to leave AM where it is. If you had to change it to PM, you just click that arrow, you okay it, let it calculate, and if you don't see any candles, click the F. Now you have a normal looking chart because we're now living in September 28th. We have a normal looking chart. If for some reason your chart looks a little wacky, it doesn't quite look right, you can right click the chart, reload all historical data. Sometimes downloaded data just doesn't download perfectly, and you can reload the downloaded data. All right. Now we're almost ready to do a replay. What do we have to do? We have one big step that we didn't do. We need our DMM so we could test our setup, right? So let me get, well, it doesn't matter. Let's say we have a DMM and we're going to enter it's a breakout trade for GDP. We're testing bonds, okay? We're testing bonds. There is a bug in Ninja. Sometimes when I press play, the first time I do a playback, it'll reset the time to 12 a.m. If that happens to you, just reset the time of the playback back to what you were doing, 8:29:50. It's going to do it. But before we get there, I'm going to create the trade. So I'm going to right click on strategies. Remember, we're just trading. We're testing a DMM. So assume that I have the GDP DMM and I'm looking at it. And I'm testing the breakout setup, okay? It's an 8:30 event and our DMM says activate at 8:29:59, okay? Now, maybe you don't trade bonds. Maybe there's no bond setup. So as you become experienced, you'll learn what might be an intelligent bracket to try. You may not know, but let's say, I have some experience. I'm going to try a bracket of 6, and I'm going to do 2 positions, okay? 1 position for each contract. I'm going to do a target of 6 ticks and 13 ticks, and I'm going to use a stop of 10 ticks. I've already got 10 there, it's default. So I now have a trade that's almost completely set up. Remember, if we label the trade with the label feature, if we say bonds, that name will show up here, and I'll show you where in a second. Make sure that your account is on playback. If it's on sim, it won't work because we're playing back, right? So we're actually completely set up. It's a breakout. We're activating at 8:29:58. We have our bracket of 6. We have a target of 6, a target of 13, and a stop of 10. We're going to go down, turn off your warnings. It's not a live trade. We don't need to be warned. Playback is the account. We're trading bonds. Don't forget, you can always save a template of what you're testing. Go to template, go to save, and GDP test, right? Bonds, and date it, okay? 12/20, and you have your test saved so that you remember next month. You won't do the same test. Now I apply it and I okay it. And I have in the control panel my bond trade. I can enable it, all right? And we get our icon. When you get the icon, that shows you the trade is enabled. Now remember, there's a bug in Ninja. When I press play, it's going to reset my time to 0. I'm just going to right click in the blank space, go to, and just reset my start time of my playback tape recorder back to 8:29:50, 10 seconds before the event, okay? Now, just to check that everything's looking good and the data is there, over here in the chart trader, where it says ask and bid A and B, there should be numbers. If there's zeros, it means that for some reason the data didn't download, or maybe you forgot to download the data. You'll have to disconnect and go back and download the data. But I've done everything correctly. We're now testing a bond breakout on GDP in September. I'm going to press play. The market's going to move just like a live market. You can see it. The news is going to, there's our brackets. The news is now out. It's past 8:30. And you know what? It's pretty boring. Not much happened with bonds on GDP in September. It took 15 seconds to fill. It didn't move very much after the fill. This would probably not be an instrument that I'd be dying to trade. Certainly not yet. It was a losing setup. So I'm thinking to myself, wow, maybe I should have downloaded the euro. So I'm going to disconnect my connection. I'm going to go to tools. I'm going to go to historical data. I'm going to go to market replay. I think the euro would move much better on a US GDP report. I'm going to go back to September 28th. And I'm going to download the euro 6E 1223 because we're going to be trading December's euro. Download the data. It's done downloading. Okay. Put my chart on 6E 1223. All right. Don't worry about the chart looking weird yet. Make sure now we have to modify our trade, right, for the euro. So right click the chart on strategies. You don't have to enter a new setup. Just make sure your trade is highlighted so you can edit the items. Time, you know what? 829.58 is perfectly fine for a GDP trade. I'd like a little bit bigger bracket for the euro. I'd use a 10-tick bracket. I think the euro could move better also. I would use a 10-tick target and a 20-tick target on the euro. And I might go with a bigger stop, 15 ticks. Okay? So we've modified our trade for the euro. We're triggering it at the same time. There's not a lot to do. Everything is set from our last time. Make sure the account is back on playback. Now it's not. So did I do something wrong? Yeah, you know what I did? I forgot to put us connected to playback. So we don't want to waste time. I already put all the items in. Save the template. Save. And we're going to call it GDP Euro. Okay? Today's date. So I don't have to re-enter everything back in. Just in case I lose it. I probably won't. But what I did not do was connect us. Connect playback. Okay it, continue it. It's going to connect. Okay, there it is. Now you just want to triple check your chart is on euro. The data boxes are on 928. Right click the blank space. We're going to put our start time 8:29:58. No problem with that as a start to 50, 10 seconds before, right? 10 seconds before. Okay it. There's our data. I saw it out of the corner of my eye. A and B, ask and bid, has data. I don't see the candles. Click the F. There's our candles. Enable the trade. Okay. JOBB icon shows up. That tells us everything is good for a trade. Press play. Time is showing up right here on the control panel. Our brackets are going to show up any second. On the euro, there's our brackets. The news comes out. This GDP report in September was pretty dull. Now, I didn't know that. We get a fill in 13 seconds on the euro. Let's see if it follows through. It may not. It may do what the other trade did. Not a good setup. It may be that September was a bad month, but the idea is you can use playback to test trades. Now, what Chantal and I do, so you can understand how playback can be considered one of the most important features of NinjaTrader, right? Of any platform. If you want to be a great trader and you trade events, you want to be able to test the events. This allows us to do exactly that. I spend half my life testing events, looking at charts. That's what I really spend my time doing. There's another thing that's important to do. Excuse me. You can look at the markets. You don't have to test every single event. What we do is we start by looking at the markets using low time frame charts, like the one range chart. You can study the charts to see all of the movement. So if we had studied how much movement there was in September, we might have known in advance that September just wasn't a very impactful month on the GDP report. It's a fluke because it's a pretty impactful report. But it doesn't matter. The point is the playback feature lets you test trades. So you can go back, look at various dates by just downloading data, and you can then study those dates. Now, you can go back. NinjaTrader gives you 3 months of free data. It is a shame. They used to give a year. A year would have been perfect. But they only give 3 months now. We subscribe to data. It costs about $80 for a year, and it's called marketreplaydata.com. Let me show you. It's actually a company that some of you might know them. They're called the Intentional Trader. They bought this company, marketreplaydata.com. And it's $89 a year, or you could do it by the month. And you just buy the data, and then you can download years and years of data. So it's not like there's just a year of data. You could go back 3 and 4 years, okay? So that's NinjaTrader playback, super, super important. We've really covered a ton today. I will answer any questions, and then we are done for today. Don't forget, everybody, go to Facebook. Let us know you're alive. If enough people will post that they understand how to get a DMM into our software, then we'll raffle off a tablet. If people just don't care enough, we're not going to do it. I mean, if you don't want to be active, that's fine, but we're not going to reward not being active. We want you to be active. Let me answer all the questions because I know you can't see them. There's a couple of good questions. Give me a second. I'll just go through them. Do we need to trade 2 positions on the bracket trade? Absolutely not. On the trap trade, I assume. You can answer it for all trades. You can trade up 1 to 3 positions on any trade. You're not required to trade more positions than you want to. You can trade 1, 2, or 3. Let me just see if there's anything else. How far back in time we answer? Okay, so that's it. There weren't a lot of questions. Anybody else with a question? If you want to ask me anything, tomorrow's education, tomorrow is Thursday, and I believe we're at noon, right? We're at noon tomorrow. Pretty sure. Let's double check. Yeah, tomorrow we're at noon. We'll be going over some family money trades and plenty of good stuff tomorrow. We still have plenty of good stuff to cover. So that's our session for today. I want to thank everybody. Really appreciate everybody for coming. It's it's a lot of work to learn something great and new and important. And if you put the time in, I really believe that you can become a successful news-based trader. If you just study the tools that we offer, you can learn how to do it. Okay, everybody, I'll see everybody tomorrow. Class should be at noon, so I'll see everybody then. Keep an eye on your email, and I'll see everybody later. Thanks for coming, and I'll see you all soon. Take care.